Well, good morning and welcome to Indian Open right here on BloombergQuint Live. It's Monday morning. We have a full week of trade ahead of us. We've not been used to this now for a while, so it might take some doing. But Devina, it's coming on the back of a very interesting week of trade and a very important one coming up with all the data points and the meetings that the European Union, etc., are going to do, and expectations of some bit of stimulus from India, and the call for that getting louder with each passing day. Good morning.
Good morning, and that definitely is going to add on to the fiscal strain nonetheless. But, so far, the last 2 weeks have been particularly good for equity markets across the globe. We ourselves saw a positive uptick of about almost 2%, some weekend at Friday. And so did the US equity markets. Friday was a good session. You had a few interesting moves coming in across the board. NASDAQ, for one, was a slight underperformer compared to SGX and Dow, which both ended up higher by about 3% apiece. Gilead was one stock of focus all through Friday as well. Aside from that, the Asian markets set up for today seem to be a weak. Nikkei is down. You got Hang Seng, which is trading under, and the SGX Nifty itself is trading lower by more than half an odd. Another concern for most of the emerging markets, and particularly for India, now stands to be what comes about with what rating agencies do, because you are going to see your fiscal deficit numbers balloon. We saw that with Indonesia. They have an external debt problem, and they did raise the ceiling for fiscal deficit to about 5% and which is why their credit outlook is downgraded by S&P. Now, if that happens to India, we've not factored that in, so that could be another big shocker in the works. But so far, we still are okay in terms of our external debt position, considering that there's just some amount of sovereign debt that we hold on to. But and our CAD problem is not as much as Indonesia's. They're sitting at 3%. We're almost in the positive territory. So all of these factors kept in mind, at least for today, doesn't seem to be like a big bang start.
Not likely to be. We've run up quite a bit. There is this S&P downgrade of Indonesia that you're talking about. Look at the Bank Nifty chart, and it shows you the kind of momentum that we've had, particularly in Friday's session, on the back of the RBI's moves. So maybe it's pricing in all the positives from that already. And let's see if today is a day of some bit of profit booking in select counters at least, and NBFCs in particular. But I think time will tell. But data, important. A clutch of numbers that have come out, a clutch of newsmakers today, all of those would be in focus for sure.
Yes, and the biggest one on Saturday with Hdfc Bank reporting numbers, and it's coming on the back of the update that they gave, which was nonetheless not a bad one of sorts. So they're stepping into this crisis on a relatively strong footing. Just want to quickly run you through the numbers, and then Shefali will come and talk about what the management put out in their con call. So we're starting off with the net interest income that came in higher by 16.2%. Profits came in higher by 17.7% at 6,927. This was still, lower on a quarter-on-quarter basis, but on a year-on-year basis, it was down. NPAs saw a slight bit of an uptick this time around. Provisions increased, but that was on the back of the COVID impact. They took pre-provisioning, other contingency provisioning of 1446 crores, COVID-19 impact provisioning of about 1550 odd crores. Advances, they focused more on the corporate side, lesser on the retail side, and that's something that they, I think, reiterated even in the con call, and Shefali will talk about it. And slippages, gross NPA about 10 odd basis points, net NPA about 6 odd basis points. Credit costs saw a little bit of an uptick this time around. These are broader numbers, but I think the bank seems confident that the business is going to continue for them, and they're going to focus more on the quality corporates going forward. Retail is going to remain tepid for them. Shefali is joining right now to run us through, what were the highlights from the bank in their conference call. Shefali, good morning.
Hi, good morning, Davina. So to start with, they gave a color on the quality of their growth, because management said that they've been increasingly being asked about the same. So they said that it's not that they're chasing this kind of a growth, but it's the customers who are coming on their own because they want to be with a stable bank, whether it's the retail customers or the corporate clients. And to achieve this growth, they have not relaxed their risk criteria or have softened their underwriting practices. So that's one. And what kind of firms are they actually lending to? So two AAA and above rated firms, in that category forms about 75 to 80% for them. And the reason why corporates are keeping the money right now is because they're choosing to keep free cash flow at this point in time. And as far as the corporate clients that they are focusing on in terms of lending, it's the clients with strong liquidity access, whether it's the government, companies, or with the companies with strong parentage. So that's the kind of clientele that they have. And the sectors where they are lending: power sector, agri and allied activities, consumer discretionary, which has seen business going up at the moment, material and energy sector. And the purpose for which these corporates are borrowing money: about 42% for working capital, 24% for capital expenditure, 15.5% for balance sheet borrowing for acquisition purpose, including that of the NCLT assets, 9% for priority sector lending, and about close to 10% for other reasons. So that's the analysis that they gave of top 20 disbursements that they had in the quarter by value.
Shefali, what about MSMEs and retail? What did they have to say?
Well, a lot of focus is currently there on these sectors because MSME, we know that that's the most vulnerable at this point in time. So about MSME book, they said that about 9% of this book may actually be vulnerable at this point in time. And of course, it has been seeing a downward trajectory since mid-March. But out of this 9%, which is a vulnerable category, just 0.5% may actually turn delinquent. So it's not going to be a huge number for them because it's, in their words, it's a carefully chosen clientele. And when it comes to the unsecured portfolio, about 80% exposure is to the salaried individual, out of which 67% of them are working in well-rated entities. And the balance 33%, the delinquency rate is just going to be 0.9%. Rather, the observed delinquency rate is just 0.9% away from the regular or the other category. So that's unsecured portfolio. Overall retail, the number of customers availing the moratorium as of now is in low single digits. In fact, not just retail, even the corporates as of now remains very low, the number of corporate clients availing moratorium at this point in time. But going forward, that number may increase according to the management. Coming to HDB Financial, very few details were given in the press release because the subsidiary is yet to report its annual numbers. A bit more color was given in the conference call. The AUM growth was just about 6% because there was not much opportunity at this point in time. And HDB Financial has given its customers an opt-out facility rather than opt-in, which the bank has given. Some other highlights: the bank said that it is adequately provisioned in case the lockdown scenario extends further and we are not able to see normalcy soon. And apart from that, credit cards, which again has been in focus in some time, the spends have obviously gone down. They were 21% below the average figure for Jan and Feb. And as far as LTRO 2.0, which is directed towards MSMEs and MFIs, NBFCs and MFIs, they've not decided on it as yet and still are in the process of assessing the same.
All right, Shefali, thanks very much for that. In fact, let's bring in Ashutosh Mishra, Head of Research Institutional Equity at Asika Stock, joining us right now to give us a sense of what he made out of the HDFC Bank numbers and whether or not it's a stock to own, after the run-up that it's seen. Ashutosh, thanks very much for taking on the time. What stood out for you, aside from the fact that they're not chasing risky growth, they're not chasing growth on the back of risk, and the fact that they're going to continue to focus on, extending good corporate loans and getting a better corporate book rather than retail?
I'm not able to hear you.
Can you hear me now, Ashutosh?
Yeah, I can hear you now.
Yeah, I wanted to understand from you, what was it that you stood out for you in the HDFC Bank numbers or the HDFC Bank Concord?
If you look at numbers, definitely they have taken over higher provisioning expenses because of the impact of expected impact on the COVID side of it. So, because of the expected impact of the COVID, they have taken higher provisioning out there. But you have to look HDFC Bank from the perspective, how much of their loan book can go into the... Hello?
Yeah, please continue.
Yeah. How much of the HDFC Bank loan book can come under the worst case scenario? Things go worse for them. So our back of the envelope calculation say roughly 31% of the loan book, which is unsecured retail credit and MSME, is where the somewhat of risk can emerge in this current scenario. If you look from these scenario and excess provisioning which they have in their balance sheet, it's turn out to be roughly approx 5 to 6% of the excess provisioning over and above the required provisioning limit which they have. So when we know, so currently they are sufficiently covered on that front, and HDFC Bank has followed this practice of creating provisioning buffer over and above regulatory requirement, which is going to help them in this difficult time. Further, the most important part is that on operating income, they are generating roughly 5.7% on assets, so which is one of the best among the large banks. And this is the lethal combination of higher operating income and excess provisioning on the balance sheet, which will help them to weather this whole storm of which we all don't know how much of the NPA will come at this point of time. But given all these things, we clearly see that HDFC Bank will be able to emerge out of it.
Would you be a buyer today, Ashutosh? That's the key question. Post what they've said in the commentary.
Yeah, so I remain a buyer on HDFC Bank at this. But the valuation has also corrected quite a lot. The stock was overowned at a point when the market started turning negative. Now I clearly see a good buying opportunity for the bank at this point of time.
Okay. Good buying opportunity. That's the view from Ashutosh Mishra. Thanks so much for taking the time out and speaking to us today, Ashutosh. Appreciate your time.
Thank you. Thanks.
Well, so the street seems to be bullish. Almost all brokerage notes also seem to suggest that it's a buy. The Morgan Stanley note speaks about how at 318 odd rupees book value for FY20, stock trading at 2.7 times. Now you give a bracket of what it could trade at 2-3 years down the line, whether it's 3, 3.5, 4. 4 is the average for the last 5 years, and if indeed that's where it trades at, then it could maybe have some upsides with a presumption that these book value numbers won't get beaten down too much. The other big financial stock in focus is Kotak Bank, and we'll talk about that. But what I want to talk about with a quick initial perspective with Avinash Gorakshekar is what could happen to NBFCs today, considering that there's such a big rally on Friday in banks and NBFCs, and we haven't seen a stimulus package of any sorts come out thus far. Avinash, tactically, would you reckon that because the world markets are also starting soft today or not going up, and there is no stimulus package that has been announced as yet, and there was such a big move on Friday, that we might see a pullback in NBFCs today?
Good morning, Neeraj. I think NBFCs which saw a good bounce on Friday, I would believe that the markets are keenly waiting for some sort of financial package. And today we could see a little bit of softness, considering the fact that today we could be starting a little softer in the initial session. But overall, I would believe that private sector banks still continue to be better positioned than NBFCs. And even if the NBFC package does come in, you're going to see the larger NBFCs, like Bajaj Finance, could possibly gain significantly. The smaller ones who are largely on the housing finance side, or maybe the loan against property side, and which currently dominate largely the business mix, I think there could be a lot of pain at least for the next 2 to 3 quarters. So I think today we could see a little bit of softening, but I think the larger players like Bajaj Finance could possibly consolidate.
What about IT, Avinash? That space is in quite a focus today, the last few days as well, and after the numbers from TCS and the commentary thereof, and we have the big Infi result coming out later today.
No, I think broadly, I think market has discounted that, the coming 2 to 3 quarters could definitely be a lot challenging for most of the IT majors. In fact, in TCS commentary also, the tone of the management was pretty cautious. And I think Infosys also, rather than the numbers, the market should be keenly looking at what kind of guidance and what kind of demand outlook the management actually comments post these Q4 numbers, because clearly the first half of FY21, Neeraj, is going to be extremely challenging. And what kind of client wins and what kind of impact it has on the BFSI segment, which is a key segment for Infosys as well as the entire IT sector, is now going to be in question. So I think management commentary on all these related issues could be very important, and I think the stock is not going to go rise in a hurry. I think you would possibly see a lot of bumps on the way. So I think it's better to hold on. I would not recommend anybody to buy fresh at this point of time.
What do we expect from Infosys is a key question, isn't it? And Agam Vakil Johnson with a quick perspective there. Agam, what are you anticipating?
Well, Neeraj, Avinash hit the nail on the head. It's not going to be as much about the earnings as much as it's going to be about the outlook. But when it comes to the quarter four earnings, we are likely to see a 1.6% rise in rupee terms. In dollar revenue terms, we're likely to see a decline of 0.3% sequentially. EBIT margins will remain largely stable at around the 22% mark, with net profits likely to decline by around 4.5%. Factors at play, we do have COVID-19 impact, which should have a significant impact in the month of March. But the company, once again, is expected to see strong bookings, not unlike what TCS has seen. Coming down to guidance, well, there are many analysts who suggest that Infosys may not suspend its practice of giving guidance, but it will be extremely conservative. And the guidance range may also be much broader than your usual 2% as far as the upcoming financial year is concerned. What we're also watching out is how clients are reacting to Infosys right now in terms of payment structures as well as discounts, also the payment periods, and of course the outlook with respect to key sectors like banking, financial, and retail. On the whole, we're not expecting the best of commentary when it comes to Infosys, when it comes to its outlook for the upcoming financial year.
All right, Agam, thanks very much for that. So, obviously guidance for most of these IT companies is going to be out of the window because it's difficult to project right now what post-COVID is going to look like, business post-COVID. But definitely, it's going to have a lingering impact. A few other stocks, you had, Tata Motors and the JLR sales numbers that came out over the weekend, and disappointing to say the least. Jaguar Land Rover retail sales, plunged 12% on a year-on-year basis. You've got a 31% decline, on a quarter-on-quarter basis. So, I mean, from Q4 to Q4. That is definitely going to impact the stock, but the stock is already sold off so heavily. I don't know how much space there is to sell off more, but maybe there is. And then a few other counters like L&T and the kind of orders that it has been getting for the month of April. It's accumulated about 27,000 crores worth of orders. All of these factors, let's see how that that plays out. But Avinash, a quick word from you on either of the two. L&T, slight silver lining with the orders, and Tata Motors with an extremely disappointing retail sales for JLR.
No, I think, Devina, as far as Tata Motors is concerned, I think we continue to be negative. And I think, despite the fact that the stock has been beaten down badly and may not see a major correction from current levels, I think the financials are going to be extremely weak, and cash flows, as I mentioned earlier, are going to be under complete strain. I would not be surprised that the company may announce a cutback in their capex plans, at least in the coming financial year, to conserve cash. And therefore, I think it's completely avoidable at this point of stage. As far as L&T is concerned, the news flow definitely is positive, but I think execution is now going to be the key factor which the markets are going to watch. With this lockdown, if it gets extended, it could obviously hamper the execution. So I would believe that yes, there is a silver lining, but I think it's yet too early days to assume that capex cycle as well as these execution of these projects are going to be easy. So I think it's better to wait and wait for some more time. Would prefer to buy this stock on a decline rather than at the current price.
I just want to focus on the Adani Group stocks as well, because over the weekend, most of the companies saw a reduction in pledge or release of pledge. So you had Adani Transmission, where pledge shares were released. Along with that, another pledge shares of Adani Enterprises, Adani Ports. Do you feel that this group as a whole now, Avinash, is something which is any which way has been in the limelight pre-COVID? You had seen some sharp moves coming across the board. Do you feel you want to stick to this group in any shape and form?
I think, Devina, the pledging share issue is one factor. The other factor is most of these Adani Group companies have significant, debt on the balance sheets. And I think this is one factor which is going to be extremely negative, at least in the near term. at least as of now, I would not be, very keen to put my money here, considering the fact that fixed costs as a percentage of their total expenditure is pretty high. So I think these companies do have a reasonable amount of cash on the books, but considering the amount of debt they have, especially Adani Enterprises, Adani Ports, I would believe that it's better to stay away. I would believe that the only exception could be Adani Gas, where they operate in the city gas distribution network, and from a longer term perspective, any decline here could be a good opportunity.
Okay. So that's some key names to monitor in the session. Davina, the other bit is, I think, Kotak Bank's actions. One, to raise the limits for equity capital, and we'll talk about that too. And two, the fact that they pulled down the savings rate or the deposit rates for holders across maturities would be important ones too. But Nikki Mirchandani, I'm told, joins us so a very quick perspective on the key stocks in news today. Good morning, Nikki.
Good morning, Neeraj. I'm going to start off with Westlife Development first because the same store growth for the month of March come in at a negative 6.9, which includes the COVID-19 impact. For the month of Jan and Feb, they were at a number of 12.3% each. So clearly we're seeing a huge amount of downtick coming in on that number. Blanket restaurants closure as a result of lockdown essentially has led to a big hit coming in on the sales. Brokerages like Nirmal Bang says that the growth is negative, more negative than expected, and this also has they've also gone ahead and cut the earning estimate by as much as 20% for FY21. We're also looking at Kotak Mahindra Bank right now, where the board meet will be held on April 22 to consider funds via QIP as well as FPO method. We're also looking at Tata Motors, where JLR sales number have come down by as much as 12.1% in this quarter year-on-year basis. This is the result of coronavirus for the fourth quarter, which has impacted the sales right now. Overall, the total sales for the company is 30.9% down in this quarter year-on-year basis. Good news coming for Shilpa Medicare, where the company has received an EIR from US FDA for its API manufacturing facility in Karnataka. US FDA has also determined that the inspection classification of the facility will be as per no action indicated. Separately, Supreme Court has refused to allow future group companies pledge shares sale. The next hearing for this will be on May 4th. This one is a Bloomberg exclusive, so do keep an eye out on this one. And bunch of Adani Group shares, they're expected to be in focus given the kind of release of pledge shares that we're looking for Adani Transmission, Adani Enterprises, ports. So these are a bunch of stocks. And also separately, Neeraj, there are going to be cement companies which are going to be resuming their operation right now, be it in terms of ACC, Ambuja, they're all going to start their partial operations right now. So it remains to be seen how does that pan out for these companies and their growth going forward in this kind of lockdown scenario.
Watch out for that, Nikki. Thanks so much for putting those stocks and news into perspective. We'll talk about some of those in a bit, but time to focus on the technicals as well for a bit. It's important to take note of that. Ashish Chatmoda first to give us his sense of what he's trading today. Ashish, good morning. I reckon you were bullish last week. A bit of a rally is played out. What are you doing this morning?
Hi, good morning, Neeraj. So I think, broadly the broad pattern of the market is still in a strong pullback mode, and the way we have decisively crossed 9,200, there was a lot of call writing being witnessed at 9,200, and still 9,200 is sustainably closed. So I think keeping 9,100 as a stop loss, I think still any dip in index is an opportunity to be on the long side, at least for a shorter term pullback trend. And this rally can extend towards 96 to 95, 50 to 9600 kind of zone. So still, 250, 300 points rally is what one can expect from current levels. So any dip would be an opportunity to be on the long side of the trade. Keep 9150 as a stop loss for any long trade at an index level. And in terms of individual stocks, I think if you look at the private sector banks, there we are seeing a lot of strong short covering, and within the ICICI Bank is one stock where we have witnessed strong buildup of long positions. So this stock will be initiated as a buy with a stop below 365. On upside, one can look for a target of 410. Pharma is still looking very, very strong, although some profit booking was witnessed in last week. But I think The broad trend looks very promising, so any dip in the space is going to be a strong opportunity, and within that basket, Dr. Reddy's looks very promising. Still stock is trading at a 4-5 years high, so that's a very encouraging sign. So now one can initiate a long 3850 would be my trading stop loss. On upside, 4050 is a short-term target one can expect in Dr. Reddy. And one small cap stock which which I'm recommending is on the specialty chemical, which is Russian chemical. So this stock has crossed its 20, 50, 100 and 200 moving average. So sustaining continuously above all the moving averages and now trading at 6 weeks high, which is a very good sign. So here one can initiate a long. 405 would be my trading stop loss. 450 is a short-term target one can expect in Russian chemical.
Sudarshan Chemical. Are you tracking Deepak Nitrite though, Ashish?
Yeah, so Deepak Nitrite as well, I think is in a very, very strong trajectory, and I think the way the stock is continuously trading above all important moving averages. This is also one stock which is continuously consolidating near its 52-week high, so that's a very healthy sign. So I think with a stop below 445, Deepak Nitrite looks good for 520, 550 kind of target in the next couple of few weeks.
Okay, I think Ruchit is also here with us, Ruchit Jain. Ruchit, good morning to you. It's going to be a fresh start this week. We've got a full trading week ahead of us. What is it that we're watching out for, considering we've already seen quite a sharp rally in the last 2 weeks?
Yes, hi, very good morning to everyone. Well, yes, during last week, we had seen a decent amount of up move, wherein the market has now completed its 38.2% retracement of the previous fall. But now if we see the Bank Nifty chart, then Bank Nifty, which has been a laggard, now finally on Friday, it showed some positive signs, wherein the index has given a close above its 20 days exponential moving average after a long period of time. Also, index heavyweights such as ICICI Bank, Hdfc Bank are showing signs of some positive momentum. So I think maybe the banking space would now show some catch-up move due to which the indices are likely to be a trade with some positive bias. Now the support base, which was earlier around 8,000, 8,200, has now shifted to 8,800. Even last week we have seen a couple of occasions where the index corrected towards 8,800, 8,820 mark, and again showed some pullback move from there on. So we are till this 8,800 support is intact, we are expecting the Nifty to head higher towards 9,500, 9,600 zone during this week. So in case if we get any intraday declines today, we would use that as a buying opportunity with stop loss below 8,800 for targets around 9,500 to 9,600 in near term.
Okay, and stocks, Ruchit?
I have a couple of buy recommendations. First is a buy call in L&T. Well, this large cap heavyweight witnessed good amount of volumes during last week. Even if you see some derivatives data, then it was combination of short covering as well as some fresh long formations in the stock. So keeping a stop below 870, short-term traders can buy L&T for target of 1,030. And one NBFC space, since the banking has given some positive moves, well, we are expecting the banking and the NBFCs to show some catch-up rally during this week. Cholamandalam Finance, if we see, the stock has formed an inverted head and shoulders on the hourly chart. Also, if we look at some derivatives data, and during last week some fresh long formations was seen wherein the open interest addition was quite good. So even volumes in cash market was good on Friday session. So Chola Finance can be bought with stop below 163 for target around 198.
I just want to come in out here. Keep in mind, Chola has got a big fundamental development or an update that they've given out as well. So be mindful of that when you go initiate a long or a short position. The disbursements in the update, they have mentioned that how the disbursements have declined about 23% and 35% YOY. It shouldn't have declined more than 10-15%. So that's part one. The underlying weakness in CV demand despite the migration to BS6, and there's a lack of supply of vehicles at the dealer level. Another red flag, I reckon, in that whole piece as I read it, is that about 80% of the customers by value avail of the loan moratorium as well. So there are a few fundamental issues to Chola. Keep that at the back of your mind if you're trading it on the long side, but it could well do it that way. Avinash, quick 30-second view. We're very close to market open. Chola, did you look at the business update? What would you do here?
No, I think, Neeraj, in the near term, I think the stock could come under a little amount of pressure, considering that the CV cycle continues to be extremely weak. And with the loan moratorium given, I think the markets could possibly be not looking at Q4 numbers, but the first quarter and the second quarter of FY21, because a lot of asset quality, I think, issues could crop up. So I think it's better to wait for some more time. The company has solid business fundamentals, but I think in the near term, there are a lot of headwinds and challenges for this.
Okay, just stay on, gentlemen. A few minutes left to go for market pre-open, so let's stick with that. SGX Nifty is pointing towards a very muted start, so no big bang moves in the morning. But individual stocks are going to, get a lot more traction. So HDFC Bank, for one, is an important watch after the management commentary and after the results. And then ahead of numbers, what Infosys does is the other one. Starting off with gains, I think, on the index, 9,400 on the Nifty. And then you've got 31,974 on the Sensex. So positive, 1.5% around that marker for both the indexes. Coming down to individual stocks, HDFC Bank is showing you a 10% pop. That is 1,000 back again for HDFC Bank. And you would think so, because you've had a quality bank which, on assumptions that business would suffer, on assumptions that their unsecured book would lead to a bigger downside, those assumptions have been, in a way quashed, and you have a reality which the management is highlighting and telling you that there's not that big an issue that the market has made it out to be. JSW Steel, 10% higher. Reliance Industries, 5% higher. IndusInd Bank, another 5%. Tech Mahindra, Adani Ports, Infosys ahead of numbers, up 3%. Indian Oil, UPL, Reliance Industries, we spoke about that. Bajaj Finance, 1% higher. ITC, ACL Tech, everything is doing okay for itself. But the biggest gainer is HDFC Bank. Amongst the losers, I just want to see ONGC down about 2.5%. That's because you have crude oil plummeting 21%, to a 21-year low. So your upstream companies are going to take the weight of that. Maruti Suzuki is down 1%. Titan is down about 0.5%. The currency, we're waiting for that to open up, close to 76.4. Just going to wait to see how that opens up as well. All in all, it seems like an extremely decent start to the morning, unlike what the SGX suggests.
Let's wait and watch how these rates shape up. Just a couple of names. TVS Motors could be interesting because of the Norton deal. It looks like starting off high, but these are early rates. So let's wait and watch what happens there. And some of the mid-sized banks like J&K, DCB, etc. are showing some spunk on open. Let's see if these also last or no. Just one last name, keep in mind Interglobe and SpiceJet, because Prakash Javadekar yesterday mentioned that there is no call taken as of now on restarting airlines or train services. So maybe the aviation stocks could be under pressure, but these are early days. Let's wait and watch. Let's wait for these rates to settle down. Then we'll talk more about them. The other big development, or not big development, but an important one, was the update given by Westlife, which is the McDonald's operator. Avinash, did you get a chance to look at that Westlife update? Of course, there was pressure on Q4. The same-store sales growth declined, but they spoke about how they're reducing the plans to open stores, and they gave us a sense of the liquidity situation within the company, which didn't seem all that bad.
No, I think clearly the business update which has been put out by the company, Neeraj, looks a bit cautious. And I think Q4 is definitely going to be a period where you could see a little amount of stress both on the top line as well as on the margins. But going forward, I would believe, if they do reduce the capex for opening new outlets, that is obviously going to impact their future top line growth. And I think the markets would obviously be looking at when full-fledged normalcy actually begins. I think one would have to wait for at least 1 or 2 quarters before normalcy actually starts off in a big way. Despite the fact the company making claims that they have contactless delivery channels, I would believe that the first half of FY21 is also going to be little under stress, and there could be a little bit of margin pain. So I think it's better to hold on. Fresh buying could come in possibly from our side only at lower levels. So I wouldn't be surprised if the earnings recovery in FY21 could get a little, stopped at least for the time being.
I'm inclined to ask about HDFC Bank technically. Ashish Chaturmota, it is still very early days, but it's showing some signs of being amongst the top gainers. How do you expect the stock to play out today?
So, if you look at the stock, this has been one stock which we have been recommending to clients earlier, and I think the way the stock has seen correction from 500 to almost 250, 260 zone. Now it is showing signs of stability. For the last 4 weeks, the stock is in a consolidation phase and now a strong move.
Ashish, I was asking about HDFC Bank. Sorry, did I hear you wrong?
Okay. Sorry, I heard about Westlife. So yeah. So as far as HDFC Bank is concerned, it's looking very, very strong. In fact, on Friday's trading session, it has crossed its 20-day moving average, and I think the way it has been consolidating between 860 to 920, I think stock is on a verge of a strong breakout above this 920 zone, and once that happens, I think we expect the stock to hit 980 to 1000 kind of zone. So chances of stock again entering into a 4-digit in a very short-term period is very much visible. I think keep 890 as a trading stop loss. Immediate target would be 950, 980, but positionally we believe stock has a potential to cross 4-digit mark.
Okay, that's HDFC Bank. The other business I want to focus on is on the AMC business. Now, Avinash, I want to come to you on this one. Now, March, when we saw the SIP figures coming out, they did hit a fresh 12-month high, I think 8,641 crores. But the other aspect is the SIP stoppage ratio, which came in at 71% and crossed the previous high of 66% that it hit in September 2019. Now, this obviously indicating that the number of SIPs discontinued or expired as a percentage of fresh registered SIPs is on the higher end. What does it do for the AMC businesses? I mean, the likes of HDFC, AMC, Nippon, Motilal Oswal. How do you think this will play out?
I think my guess is, Devina, in the next 3 to 6 months, you are going to see a lot of stress on inflows for most of the larger AMCs. And I think the very fact that SIP, cancellations have been around 65 to 70 odd % clearly shows that incremental SIP flows are now going to be impacted at least for the next 1 or 2 quarters. Longer term, I think these numbers would get corrected, but in the near term, these challenges would continue, considering the fact that the markets are going to be volatile and there's definitely a lot of stress on liquidity by these investors. So short-term retail investors obviously would book out. But yes, in terms of the incremental upside for these companies, there could be a little bit of sluggishness in most of the AMC companies like Nippon or HDFC AMC, which, in the near term at least are going to be underperformers.
Okay. Let me just get in a quick chart check as well. Ruchit, I'll come to you. HDFC, AMC, Nippon, anything that you're buying?
I think overall HDFC AMC in this pullback move has now approached its 200 DMA, which is showing a resistance around 2800 level. So I think the risk reward ratio is not favorable to create any fresh long there. In fact, if any trading long positions are there existing, then around 2800 it would be a good idea to book out and book profits on the longs.
Okay, got that. Some other news points in some other companies to keep in mind, while obviously Nikki highlighted that a few cement companies have already started production and are likely to start in today's session. Would you be a buyer in any cement company now ahead of operations kickstarting and the fact that there are some murmurs of the government looking to pick up spending? You feel that things could come back on track, even though at a slow pace, but you could be present in this pocket, Avinash?
I think within the cement pack, I would believe that companies like Ultratech, Ramco Cement typically could definitely do better. And I think smaller players like JK Cements, I think markets would be definitely be happy that most of these players are now restarting their plants. So incrementally, I think possibly the June quarter and the September quarter could possibly now see a kind of resumption of normalcy. But yes, for markets to actually re-rate these stocks, it would take a long time because infrastructure, pockets have definitely been impacted significantly. And I think as far as execution goes, I think, as long as there is sluggishness in infrastructure, these stocks would definitely not fly immediately. But yes, definitely these stocks are good to buy on every decline.
Okay. Watch out for those names. By the way, pre-open rates have settled down and HDFC Bank is turning out to be the top gainer, 4.47% higher. So do watch out for that one. Giving it company is Kotak Bank. We were talking about it in the pre-open session, or rather before the pre-open session. And Devina, it's very interesting. Two things. One, the savings cut, but that's okay. The other bit is their decision to raise equity capital or consider raising equity capital. Maybe it's just an enabling provision or enabling resolution. but it's an interesting time that it has come in, and a lot of talk around whether this is being done to pare down the promoter stake. I don't know how you think about it, but somehow it feels that this may not necessarily be due to that, but in order to keep some gunpowder ready for capturing growth when growth opportunities come in probably the second half of the current year or the current financial year.
All right. We're just minutes away from market open. So before we get in a sense of, what all these banks could do in the near term, let's also tell our viewers all that there is to know before start of trade this morning. So Hdfc Bank reports a 17.7% rise in net profits for March ended quarter. Provisions rise, including 1,550 crores provided for contingency due to COVID-19 and lockdown.
IT major Infosys is expected to report a stable set of numbers for the fourth quarter. Revenue is expected to rise 1.6% on a sequential basis. Margins seen stable at around 22% mark. Focus will be on the outlook.
You've got you've got Jaguar Land Rover reporting a 31% drop in retail sales for the quarter end in March 2020. Volumes for Jaguar declined 43%, whereas those for Land Rover dropped by 26% here.
Westlife Development expects to report same-store sales decline of 6.9% for quarter 4 FY20, with overall sale contracting 1.5% year-on-year. The firm will report a decline in its same-store sales growth for the first time in 19 quarters.
Zydus receives final approval from the US FDA for baclofen tablets. Baclofen is used to treat muscle spasms caused by certain conditions, such as multiple sclerosis, a spinal cord injury, or disease.
Shilpa Medicare receives the establishment inspection report of the EIR from the US FDA for its inspection conducted on its API manufacturing site located at Raichur in Karnataka. Well, these are some names that you got to monitor. Kotak Bank too looks like starting off well, as I was saying, so do watch out for that one. That's that big newsmaker in the session today as well. Ruchit, would you trade Kotak on the long side today?
I think overall the bank Nifty has been showing some signs since Friday. But if I have to pick some stock from the private sector banks for short-term trading, then I would prefer trading ICICI Bank and HDFC Bank over Kotak Bank. Primarily because both these stocks have given a breakout from a triangle pattern and its 20 days exponential moving average. But Kotak Bank has not yet given a breakout above its 20 EMA. So I think if one is looking from a trading perspective, then ICICI Bank could be bought at current levels rather than buying Kotak Bank.
All right. Avinash, I just want to quickly come to you. A sense that we're gathering now from most of our market conversations is that you can start looking at banks aside from an HDFC Bank in the private banking space. Axis Bank fits that bill. ICICI Bank fits that bill. Do you feel that it's time to look at some of these banks instead of just focusing on HDFC?
Yeah, I think clearly, Devina, the second and the third best banks could obviously also be in focus. And I think ICICI Bank and Axis Bank also definitely seem to be well capitalized, and to a large extent, they would also be providing a little more for the COVID-19 incremental damage. But I would believe that somebody who's having a slightly medium to long-term view could possibly look at Axis Bank and ICICI Bank, considering that the kind of diversified streams of business and the kind of provisioning which they have and the kind of capacity to withstand shocks further, make them good investment bets, provided investors are willing to take a long-term call. In the short term, there could be challenges, but definitely longer term, these banks could do well.
Okay. So watch out for some of these, not the top ranking bank, but maybe the second and the third bank and ranking banks as well, which are well capitalized. Top trading ideas for the day then. We're just a minute plus to market open. Let me come to you, Richard Paul. What's your top trading bet today?
Another technical and pharma looks quite good. Last week the stock has shown a consolidation phase, and now it thinks it's indicating a breakout above the resistance of 550. So keeping a stop loss below 549, I would recommend buying JB Chemical and Pharma for potential target around 600 and beyond. Okay.
Ashish, what about you? What's going to be your top idea for the day?
I'll go with ICICI Bank, where we have seen a strong breakout on weekly chart. So 365 would be my trading stop loss on upside, looking for a target of 410 in ICICI Bank.
Yes, that's what we were talking about earlier on, the Axis and the ICICI banks of the world. Just a quick call from you, Avinash. Are you watching out closely for any of these oil and gas stocks, considering what crude oil is doing? It's at a 21-year low.
I think it could obviously, benefit oil marketing companies and, even players like Reliance. I would believe that oil marketing companies, like HPCL and BPCL could definitely be looking at lower incremental raw material prices, if these kind of crude prices continue to remain, below 20 odd dollars.
Okay, we close to market open. Avinash, take a moment to thank you for joining me today. Really appreciate your time. But here's how the markets are starting off, much better than what the SGX Nifty was indicating. Let's see if the pre-open holds on, and maybe we have HDFC Bank and Kotak Bank to thank for that. Well, we are indeed starting off about 1.86% higher. So not a bad start, you would have to say. The Nifty and the Sensex about 1%, and the Nifty Bank, as I said, 2% higher. HDFC Bank leading the way, 5% higher for that one, 954. It's a good start to the trading day for that one, but it's a sole one. I don't think too many others are giving it company because, or maybe Kotak Bank marginally about 1.7% higher. So those are a couple of names. Do watch out for Infosys, JSW Steel and Vedanta. Those are starting off okay. There's some strength in Bajaj Finserv and Shree Cement, so that's not doing too badly. And BPCL is starting off okay too. What is not doing well? ONGC, Crude Impact, 3% lower. Bharti Infratel about 2.5% lower. There is weakness in Eicher Motors after 3 or 4 very strong days, so a bit of a pullback. And Britannia corrects a little bit in the session today as well. ICICI Bank, remember, is starting off slightly weak. Reliance too is starting off weak. Devina, what are you spotting?
Well, a few names which have been active last week and continue to remain active this week as well as Ashoka Buildcon. And that stock's doing really well, 6% higher this morning, and continued interest out there. Volte Patil too, real estate on Friday did well. It's a carry forward of that. And then you have the likes of J&K Bank, which is up 20%. Wellspun India is up about 5% IRB Infra is up about 5.5%. You've got Shree Infra. So all infrastructure stocks are doing well. The construction activity likely to begin. You've got Sobha up, the likes of an Indian Hotels. Remember, they're also looking to raise some funds. Stocks up about 5.5%. PNB Housing Finance, 5% higher. Then you've got the like of Tech Solutions, Questcorp 5%, ACC is up 5%, then Networks is up 5%. Retail continues to do okay, so that's up another 5% at Upper Circuit. Then you've got the likes of an IOB, Equitas is up 3.5%. So NBFCs as a pocket is still holding out from Friday's move. They're not as big bang as Friday, but there's still some gains coming across the board. City Union Bank, Ujjivan Financial Services, DCB Bank are some of your other bigger gainers in the session. And then you've got the likes of Birla Corp, MRPL, DB Realty, doing okay for itself. What's not doing well, Vodafone Idea is down 5%. Aviation stocks, again, they're not allowed to take bookings from 3rd May. They're not allowed to take fresh bookings yet. So 4% lower for Interglobe. PVR continues to look weak, 4% under for PVR. And then you have an L&T Finance. You've got the likes of GAIL, which is down 2% as well. Remember, GAIL, while they have said that they are coming out, they're sitting on the table and coming out with a plan to catch up on the lost business. They're still not, auguring too well in terms of what they could do to ramp up supplies to the essential areas like fertilizers, like chemicals, and thereabouts. So all of these factors kept in mind. Breadth is positive. The stocks are declining 9%.
Well, quick opening thoughts from our experts. Ruchit, I'll come to you first. Infosys ahead of the numbers is starting off well, 645. Would you stay long if you were long, or would you take some money off the table? What are the charts indicating?
If I look at short-term historical data, and in the last March, the team from 500 150, and in this entire month of April, we have seen a consolidation phase in Infosys. 60 is the higher end of the range, and now strong around 600. So I think if any existing longs are there, now whichever side the breakout would be, the next directional move would be that in that direction. So if any existing long positions are there, I would recommend to continue to hold on with the stop loss below 600.
Okay, Ruchit, we'll leave it at that. Thanks much for taking the time out. The real interesting one today is HDFC Bank and Kotak Bank. HDFC Bank 944, Kotak Bank about 1% higher. So those two large caps seem to be starting off the blocks. Well, we have taken the call on HDFC Bank already, but it's now coming back after dipping to the day's lows. So decent start for that stock in the session today. Well, if we have Ashish Chaturmota still with us, we'll get him in just moments from now and ask him about what to do with this one. But Devina, HDFC Bank, clearly the showstopper.
Yeah, it is. And, it's most likely that while we're talking about this move coming back in, and as we've had conversations with many, it's not like your leadership is going to change. You may have more additional sectors chipping into the next rally, but it's still going to be the front runner, which is going to be financials purely because of the weightage that holds. And within financials, then again, if you have to take a look, it's going to be your private sector banks. And to filter that down further, what do you get? Get the likes of banks which actually proved their metal, and Axis Bank, ICICI Bank. These are the names. But Ashish is here with us. Ashish, quick word on Kotak Bank. I'm not sure if you've already spoken about that, but just to reiterate, what would the call be on Kotak now?
So, Dina, I think Kotak Mahindra is in a complete consolidation phase, and I think so although the base has been formed at around 1100 odd zone, but I think for any sustainable up move to happen, I think the stock needs to at least cross 1235, 1240 kind of zone, which it is shying away. So I think 1235 is an important resistance point. Till it doesn't process, I think it's going to trade more of sideways between 1150 to 1230, 1240 kind of zone. But I think in the private sector banks, the stock which we like is ICICI Bank, so if it comes into ICICI Bank, it's a good opportunity to be on the long side of the trade. I think stocks have potential to see 400, 410 kind of market in an immediate short-term basis.
All right, I think there are just some two circulars that have come in on the exchanges. One on Alembic Pharma. They've announced US FDA tentative approval for alcaftadine ophthalmic solution. And the other comes in on Walkhard, where Walkhard has received the US FDA qualified infectious disease product designation for WCK 6777. Now, that's an antibiotic under development by the company. These two stocks are, some development out there. But Ashish, comment on some of the others, pharma names like likes of Kedila, Ipca, Aurobindo. What do you think about these?
So I think most of the pharma is in a strong uptrend, and I think, as you mentioned, names like Cadila Healthcare, which after a strong rally has been consolidating for last 5-6 trading sessions, is showing signs of strength. And I think with a stock below 325, Cadila has a potential to see 375, 380 kind of zone. We have discussed about Dr. Reddy, which is in a strong uptrend, and I think any dip is an opportunity to be on the long side of the trade. So I think with a stop below 3750, Dr. Reddy has a potential to cross 4,000, 4,100 kind of zone. So broadly, I think pharma is one basket where any dip, there is going to be a lot of buying interest, which we are going to witness. So I think we should keep names like Dr. Reddy's, Divi's Lab, Ipca Laboratories, as well as Cadila into a buy and dip kind of stock selection criteria.
Okay. Well, Ashish Chaturmutha, we'll leave it at that. Thanks so much for taking the time out and being with us. Now the big boy is showing its true colors. I think that initial dip in HDFC Bank came in because it's gained now for the third straight day. So everybody who was long on HDFC Bank, some of them might have taken some profits off the table. It dipped from an open of 954, 955 all the way to 939. Now back to 4.5%. The commentary was rock solid. I think brokerages by and large have been bullish about what HDFC Bank has said and displayed. I dare say, as Devina, if there wouldn't have been this overhang of Aditya Puri moving on and there being a succession, not issue really, but a succession event, then maybe things would have been even more different for HDFC Bank. Devina, in particular, the Morgan Stanley note laid it out very well. 318 or 319 is the book value. It's currently trading at about 2.8 times. The 5-year average is 4 times. You don't give 5-year averages right now, but at 2.7, 2.6, is it in a buy zone? That's the question that I think a lot of people would be asking.
Yeah, and it's just the fact that all of these names, I mean, the the fear of bad loans was so strong at the start of it that you just saw that kind of backlash. And the fact that these stocks are heavily owned by FIIs also, and not to say that you still had, the PBOC increasing stake marginally, to take it above 1% in HFC, but the others, that everything started to sell, and because the holding in all of these stocks was the maximum pre-COVID-19, that's where much of the damage came in as well. I want to look at Avenue Supermarts. Avenue Supermarts down about 2% right now. We were seeing some fresh pain that's coming into in some of these microfinance lenders. They've been beaten out of shape. Obviously, they're the ones that are exposed the most to the risk of non-payment, unsecured loans that they give out, even though quantums are small. But the risk of repayment not coming in is huge for them, and therefore the fact that you did get that additional support from the RBI governor in the form of saying that 25,000 crores of the 50,000 crores was specifically targeted towards money going into small and mid-sized NBFCs and microfinance lenders, maybe, just maybe, that can be a little bit of a helping hand for the likes of Spandana Spurti, Credit Access Grameen, and some of the other smaller names as well. The other ones, obviously, taking a lead in today's session, some diagnostic companies are doing well. You've got Dr. Lal, which is up 1.4%. Metropolis has moved up about 0.5% plus, so watch that out. And SBI Cards, it takes a breather from the selling that it has seen so far, and it's up about 1%. Remember, for Hdfc Bank also, they said that their cards business is suffering by about 21%. So the largest cards business is suffering 21%. You can anticipate similar or probably slightly more pain for the likes of an SBI as well. Now, so when we're talking about an annual profit of about 1,500, 1,700, that was the start when the IPO was announced, and that was the expectation and the anticipation of profits for an SBI Cards. But now that seems to be becoming a bit more realistic. You were optimistic at that point. Now you start becoming a little more realistic, and therefore the market has meted out this treatment to SBI Cards, which is now at about 535 when it released an IPO of 755.
Well, we got to watch out for some of the others. Just before we get in, Ajay Srivastava should be joining us any moment. Shanti Gears, as a small cap name, is doing rather well for itself, so up about 20-odd%. There is strength in Jammu and Kashmir Bank, up about 17%. NRB Bearings is up about 16-odd%, so that's starting off well. There is strength in Himadri Chemicals, up about 10%. That's one more that you got to keep in mind. Andhra Cement, actually, so it's a small stock, chuck it. And one which is looking weak or wobbly is PVR, 5.5% lower, 1159. So, well, to watch out for these multiplex names. They've corrected a bit already, but you've got to wonder whether the business models remain the same or do they change, and whether therefore people are a bit worried about what would happen to these names going ahead or no. So PVR, Interglobe Aviation are a couple of those sore spots, in addition to, of course, the big boy ONGC, which is starting off 2.5%. I must say, where I'm a bit perplexed, or where I got it maybe slightly wrong compared to what I was thinking, was in Reliance Industries, because one would have thought that with all the chatter around the Jio Facebook deal and imminent, because that was the talk of town over the weekend as well, maybe Reliance Industries would have started off well, but maybe the crude price fall kind of not bearing in on it, and one would probably wait now for the actual announcement to happen as opposed to waiting for flow surrounding it. But Ajay Srivastava of Dimensions Corporate Finance with us on the show with his thoughts. Ajay, so good having you. Thanks so much for joining in.
Thank you very much.
Do you think this move that we've seen is a bit of a bounce in an otherwise bear market, or would you read into it differently?
No, I think, I don't know bear markets or bull market, but I think it is definitely some opportunistic buying on the hope that there will be a big financial package coming from the government of India, and that should bail the industry out. Now, whether that happens or not, none of us know about it. We have been waiting for it and so on. So it's more, I would not say bear, I think it's more opportunistic buying. That's one. Number two is that the shorts have kind of just closed their positions and gone away. To that extent, the short positions have been closed. The market went up. The liquidity, as you know, is very, very low in the market in terms of trading volumes, etc. So to my mind, I think it's a set of three circumstances, starting with the US, the way the US market is going. Number two, opportunistic buying. And third is hoping for a big package to come from the government, which should bail the industry out. Now, whether these are correct premise or not, time will tell. But in our view, every big rally from here onwards should be used to sell, not to buy. That's our principal thesis. And the reason we say that is, that if you reset the clock pre-COVID, the markets were hitting highs when the economy was hitting lows at this point of time, and the market was starting to correct quite rapidly. So the government had a challenge pre-COVID itself. Now, post-COVID, the challenge becomes bigger. So we are not sure exactly what package can bail it out, whether the good Rabi crop and the Kharif can bail it out. But I believe that these rallies, a big rally, should be sold into for at least the leverage stocks rather than buy into the stocks.
Wonder if you believe, I mean, are you contrarian in this belief that the large cap, well-established banking names will also suffer? Because the commentary coming in from the management doesn't seem to be all that bad if HDFC Bank's commentary post-results is anything to go by, Ajay.
Well, two things. One, it is too much. I didn't see the commentary was positive or negative because all they said was that, listen, we don't know what's going to happen, which is true. They have a 90-day window where they don't have to recognize any of those defaults. So they have a till June quarter. To that extent, there's no provisioning requirement which will come into the place. So to that extent, the banking is pretty secure. And the third is that if you come with a thesis that always, and that's the truth, always the banks have been bailed out by the Reserve Bank of India and the government of India. And therefore, the packages will again go back to these banks. Yes, the thesis is correct. There's a large cap and the bank will do it. And if you look at the results of HDFC Bank, this quarter result, what do you see there? You see a big jump in CRR income, 100 to 500, 600 crore. 500 crore is extra. Bank CRR is now interest rate is 4%, when none of us can get 4% in a savings account. That has not been dropped. Then you look at a 800 crore saving on the tax line. So put the two numbers together, that's 1300 crore, which has nothing to do with the business of the bank, but only to do with regulatory dispensation. Now, if that kind of dispensation continues, sure, the banks are a great bet. So you short the economy stocks, bet the banks, because what has happened post 2008 also, the banks did well, the economy went into the trouble. If the same thesis continues by the regulators and the government of India, the same thing will happen. And look at the irony of it. 800 crore per quarter is the tax benefit, 500 crore CRR income, 1300 crore, which is 5,000 crores is the benefit to HDFC Bank alone. Well, you can argue, did they deserve this kind of benefit in an environment where the SMEs are struggling? That's a moral question which can answer. But I think what has more perplexed me was when looking at the numbers was nothing to do with the stock market. That here is a company which got a benefit of 1,300 crores a quarter, which is 5,000 crores a year. Parent company would have got the same benefit, maybe 10,000 crore total benefit to the group. And what would they commit for COVID? 150 crores. I think it just bothered me a little bit on the moral side that here is a government which gave you 10,000 crores and the group committed 150 crores. Now, if those packages come to ail the banks again, sure, banks are a great bet. But I think time has come to move the needle away from the banks into these small business loans. And I hope this happens. And that is why we are circumspect that long term, there is a valuation issue with the bank. June quarter is certain there is no problem because everything is forbearance. So people who are buying stocks today or holding stocks don't need to worry till June quarter.
Ajay, good morning.
Good morning.
Are you worried at all about ratings agencies and their actions against India if possibly our situation worsens or deteriorates from here? Because you've seen them doing that with Indonesia over the weekend. Their external debt position really weak, fiscal figures, ceilings pushed up. And that's probably going to be the case with us as well. We are going to see a big fiscal deficit number that's going to challenge growth in every shape and form. Do you feel the threat of ratings agencies looming large for us as well?
See, let me put it this way. Threat of rating is obviously there because once you lose an investment grade, then you get into problems in trying to, people to buy into your sovereign debt, etc. But I would say that's a little, kind of built into the market structure today because it doesn't matter which country it is. If it's a developing economy, the fiscal deficit is going to go up and the rating agencies will have to kind of lower everybody's rating. So if you look at the new norm was X, No, it's not that somebody will remain up and we will only go down. I think the whole world will kind of go down in that manner of speaking. So to that extent, relatively, everybody was where it is before the whole thing started. So that's a good mitigating point, that we are not going to be the singled out to be the only one getting hurt on the rating. And therefore, relative to the rest of the world, we'll be where we are. So I don't think that's going to impact us much. And number two, of course, I don't impact us too much because I doubt many Indian corporates are going to borrow money in the current year because there are now not enough capex, etc. Number two is government has already seen a large amount of FIs selling in debt funds, so mostly should come back into gilt rather than going out of it. So I think, relatively speaking, I would say that's a risk one can run in and run easily because everybody's in the same boat at this point of time, and India's dependence on global capital, non-equity, should not be that significant in the current year.
No, that's correct. I mean, our external debt position is not all that weak. And even for CAD, we're now CAD positive. So at least on some of the macro parameters, we're doing okay in the current scheme of things. But Ajay, just want to highlight, if when you do a sector-wise analysis, and I want to pick up one, and there's only one stock in that business, but the fact that you got commentary from HDFC Bank suggesting that their cards business is suffered by about 21%. Where does it leave a business like SBI Cards? I mean, the fanfare that it had at the time of its issue, now just completely getting washed.
See, the stock has of course come down quite substantially to that extent, and I'm not commenting on the SBI Card per se as a pure play business. But the fact remains that, if you look at these businesses, you need to look at a little bit longer term in terms of credit card, because there is a huge time gap between the time you issue the credit card and the guy starts billing on it, you start getting the income on it. So looking from a 3-year perspective or a 5-year perspective, I think it's a great business to be in. And if you've got one stock which does it, it's fine. And, HDFC Bank commentary, as I said, also was that, last 15 days of March were a kind of washout. This month is going to be a washout, etc. But I think if you look at from a longer perspective, these are great annuity businesses at this point of time. Number two is, where in the world can you get a product where people borrow at 2% interest or 2.5% interest per month, 36% interest per annum, where your repo rate is 4%. You can borrow 4 from the RBI and lend at 36% to the hapless consumer. Now that's a great business to be in. So I think, yes, there's a temporary hiccup, but longer term, I think it's a great business to be in, because in the present scenario that we are in, the reliance on debt by the Indian retail market is going to be huge and is going to continue for the next couple of years, given what we are going through right now. I don't see that going down. So 36% income on one side, 4% cost of fund on the other side. Make your math. It's a wonderful business.
Okay. Ajay, the other business that I want to talk about is, obviously now that we have seen, some furloughs, we've seen salary cuts being announced. So even for the salaried class, going out and spending money now becomes a challenge, especially for the discretionary spending, the larger ticket discretionary spending, and be it, even for that matter, somebody talks about a home decor, repainting a house, or building a new house, construction is stopped. So, all of that comes to a really big standstill. In light of that, do you feel that consumption is going to take a steeper dip for the larger discretionary spends?
Of course it will. And, I tell you something. What's happening today? People are absolutely happy because month of March salaries have been disbursed by and large by everybody. The household expenditure has gone down dramatically. You don't have to pay for your transport, your children's tuitions, going out, movies, nothing. So you had more liquidity in this month, and then you got your EMIs deferred. Now put your EMIs deferred, all the expenditure zero, income is the same as before. Indian household never had better liquidity than the month of April ever, I guess, in the history. Now look at the cliff. The cliff is coming in the month of May, when maybe 40%, 50%, I don't know the number, but it's going to be substantial. They will not get their salaries. And then the problem will start. And also, I must tell you this, when you're talking about banking sector, one thing which has happened, people didn't realize, why banking results will look good for the March also, that banks automatically debited EMIs and interest and credit card dues, everything to the account of the consumer, because there was money in the bank in the April when the salaries came in. So I don't think so there'll be too much deferment for the month of March. So here we have a scenario that April, if the salaries don't come, you are looking at a big cliff. And that's when all the deferments will come in place. That's when the cuts in consumption will come in place. So unless there is an equivalent of a salary protection package like the United States has done, you are looking at a big cliff and a big fall in consumption. I think, personally speaking, I may be totally wrong, market is just oblivious to this kind of what's going to happen in the month of May, knowing that in April there were long lines, people are buying provision and everything, and life will be very good. Life is not going to be good in the month of May, it's going to be very ugly in the month of May. So consumption will fall and will fall drastically, and I do not, okay, how much will happen depends upon the government package. As I said, all eyes are on the government package. This market rests on the government package. If that doesn't come through in a big manner, my personal belief, if there's no big package, you will see the lows of the market at 7,500 being visited again very, very soon.
Ajay, I think all of these pertinent points, and thanks for making them. Just one final question from mine, at least. Should the package come in, and if the package is more towards the struggling MSME sector, it'll probably do wonders for those businesses, maybe not so much for the list within the listed space, right?
Well, okay, here it is. I think the listed space, if you look at historically, post the last 1.5 lakh crore tax package, went up beautifully. It went up beautifully, 20%, 30%. But look what happened in the end. They said there is no demand. Now, where does the stocks go? The stocks were edging down even pre-COVID. The same, but this time, if you do it correctly, if the MSMEs survive and the engine of the economy starts to work bottoms up, there is greater strength to the rally in the stocks, the large caps, than it was when the direct benefit tax benefit was given, because consumption was falling, as you all saw the growth rate in the first quarter pre-COVID. Therefore, in my belief, if a big package comes from MSME and consumer protection package, it's a great positive because you're laying a good foundation for consumption, for use of product and banking services. You're not giving a direct injection, steroid shot, 6 months up, and then the crash happened. That will not happen if you do the correct way and get the economy. So my view, any big package is going to be greater strength to the market and the large cap than a direct injection only for the large caps.
About that. Ajay, it was a pleasure chatting with you. Thank you so much, as always, for joining us with us. Well, we've come to the end of the show, but I just want to quickly run you through the coronavirus update that we have as of 8 a.m. this morning. Total number of confirmed cases stands at about 17,265, with active cases being 14,175, cured 2,547, while the deaths stand at 553. So the last 24 hours, you've seen fresh new cases to the tune of 1,558, deaths of about 36, and recoveries of about 315. We're going to leave you right here. It's a goodbye from Neeraj, myself, and the entire team that's put the show together with an absolutely flat mark. Stay tuned.